Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Monday, September 22nd, 2014. We're going to take a look at the market and the indicators, and then look at Apple, Twitter, and Facebook. Okay, the Dow Industrials was down 107 points today, a little bit lower at one point in time. But when we look at this little picture that we've got here, right here, it looks like some kind of an evening star to me. And I'm not the master of candlestick formations by any means, but when you get a doji star type look to it, and you get a bullish bar followed by a dark cloud, that's kind of what you get in here. So it's a little bit ominous. We'll see if we continue to get follow through or not. Let me see if we've seen, this wasn't quite the same picture, but a little bit like it. And then you can see we had at least one more downdraft, and it was, a little pullback, and then even a little bit more. So we'll see how it turns out. But right now, that's my take. That's my little picture of it. We're at the top of the ending diagonal. We're at the top of the Keltner channel. We've got some divergence going on, especially on the weekly basis. And I talked about the 7 concerns I had on the weekend. And I've told you I've had the caution flag out for at least a week. So we'll see what starts to happen in here. The S&P 500 down, 16.1 points today. Pretty good down day here. This is closed down below the 10. I don't think the Dow did. No, the Dow did not. So the S&P is weaker than the Dow from that standpoint in terms of closing back below the 10-day moving average, and actually below the 21-day also. And it's a lower close than the last 3-4 closes of last week. So not a pretty picture there. But again, we're going to need more damage to the downside and starting to roll over before you can start to say, well, we're definitely in sell-off mode, because right now, we've got 1 day. Basically, of course, we had a little bit of a reversal day on Friday, so we could almost say 2 days. Now you look at NASDAQ, it's a little weaker in here. Let me blow this up. And it's, dramatically down below the 10 again. So we continue to get follow through off of this, then that's, that could start to set us up. The last time we had that follow through, where we had another close down below the lower close, was back in July, or August 1st, I guess it was. The New York Composite had that big reversal day on Friday, and then, big down day here. So it's just continuing. It's just a little bit more of the same. Russell 2000 is looking pretty weak. Now, the one thing about the Russell here, you've definitely, and I mentioned this, you definitely have the 10 closing below the 21. I apologize for my sinuses today. So if I'm sniffling or trying to clear my throat, my allergies are kicking in, trying to get me here for the last day of summer. Tonight officially turns into fall at 9:30, I think, Dallas time. Wonderful. I can't wait. It's my favorite time of year. All right. So now we've got the Russell 2000 breaking this trend line. And this is a trend line from March 2009. Okay. So this is a 5-year stock market trend line. And, that's... So when you break trend lines, what does it mean? Does that mean the bull market's over and it's definitely going into a bear market? What it means is the trend is broken, and you could go sideways for quite a while, or you could start a sell-off. I mean, it's just telling you that something is breaking down is what it's doing. Now, when you look at this from a little bit bigger picture, you can see this topping formation in here, and clearly it bottomed right in at these 2 points. So we're not even close to there yet. So that would be my next target. First, number one, it's got to take out this low in here, which is, let me get my crosshairs going. We're around 1110 on the Russell, around 1110. So, you're going to need to take that point out, and then you're going to come down here and you're going to test this 1080 what were the lows? 1082.53, 1082.72. So support came in at both of those points in January and in May. And I have a feeling we're going to come right on down and challenge that. And if we break that, then who knows? We'll see Katie bar the door. So, all right, that's the indices for tonight. Let's take a look at short-term trading index. Now it's the 10 days starting to pull back up again. Not a surprise, because once you get this extreme point, well, then now you start to get some more of these, the readings a little bit higher. Today it was 1.23. So we've still got this. I've talked about this 0.484 for several times now. The VIX jumped up today. You got the 10-day on the VIX, much higher than the 21-day. Or I mean, the moving averages is higher. It's not much higher. It's higher. And now this is breaking back to the upside. So it looks like it's trying to go back up and challenge the. You know what I need to do in here is probably draw a trend line to see if this thing will break a trend line. So let me just take from, say, a previous point here, draw across here, and then we'll just watch to see what kind of price action we get tomorrow. And see, I've done that before. Now, sometimes you don't get follow through. Sometimes you just get a break and then, that's it. But I like to do that just to give me some indication. Okay, the high-low. First, the first thing I want to mention is the new lows. The new lows were 161 new lows for today. Now, here's the interesting point about this. Okay, we had basically one down day. I mean, Friday, let me go back. Yeah, one down day. The Dow wasn't down on Friday. It kind of reversed and almost did. Now, I shouldn't say that, the New York Composite had a big reversal down. So you could say 2 days in a row, but on the Dow, one big down day of 107 points. But it's not like the sell-off. We haven't incurred the sell-off of like July to August, January to February, and anything like that. Yet, when you look at the new highs, the new lows for the year, we had more new 52-week lows today than at any point all year, and it was higher. The only other point higher here in the last year was December 12th of last year. So all of a sudden, after basically one day of a downtrend, we're hitting new lows, 52-week new lows, that has more of an extreme sell-off than has occurred at the end of selling periods is what I'm trying to say, and I'm not sure I'm saying this really right. So I mean, you'd think that back here when you get these kind of extensive sell-off and this kind of extensive sell-off, you'd be hitting more 52-week lows than you are all the way up here after one bar. But yet we're not. So that seems to me to be a fairly weak picture. Now maybe I'm just reading it the wrong way, but that's just my first take on it. Let's put it that way. So now when we net out the high lows, so there's been 130 more new lows than new highs for the day after I subtract out the new highs. So here's the net new highs, new lows. And you can see we've fallen to the lowest point since that December 12th, 2013, which happens to be my birthday, but I'll just throw that in there. It's also Frank Sinatra's birthday, but December 12th, 2013. So that was the only other previous low point. So I think this is a little bit bearish picture here for the fact that we're getting this kind of a low after basically one day of a sell-off. So we're just, we need to keep watching this pretty closely. All right, that's it on the market today. Let's take a look at Apple. Apple, I've been waiting for this after it hit this high up here, and I was expecting it to come up in this area. I'm actually pushed a little bit higher. So I'm was expecting a flat. And what do I mean by a flat? I've talked about this before, but I was expecting something like this in terms of a sell-off. And I'm not sure if I can really count this wide-ranging extreme in the intraday action that occurred on this day or not. But it looks like we came real close back up into here. You know, so this is what I'm saying is this looks like A, and this looks like, you know, B, and now I'm looking for C down in here. And so we're not quite there, and we'll just have to continue to see if we get, you know, some more selling that takes us down into, it's actually the area I was looking for is down here closer to 94, close to this trend line, bottom of the Keltner channel, actually more in this 90 to 94 range. And we'll see if we get that kind of a sell-off or not. So that's what I'm watching for on Apple. And then Facebook. Facebook has been pretty interesting. This has not looked impulsive to me. It looks like it's struggling to push higher. It'll have one good move like this, and then it just struggles for weeks on end. And so I'm still calling this a B wave. And the other thing I mentioned, you know, I talked about is if you're calling something a B wave, it can go beyond the beginning of the A wave, this first wave down. Okay, it can go beyond the beginning of it, which is right here, but it usually is not supposed to go beyond 138% of that. So what I do is you measure back down. You say, okay, here's the beginning of A, go to the bottom of A. And where's 138%? Well, it's at 161.8. Did I do that right? No, I did not. I did not do that right. There we go. I thought something was wrong because I did this before. I did this before we started the video and it worked. So I was like, okay. Something's wrong with my picture. Now let me punch in 38.2. I was going to leave this on the chart, but then I realized it was kind of messy. Okay, so here's this high up in here. Doesn't quite get to 138.2%. Okay, so it hasn't gone that 38.2% beyond the beginning of A. So this is still a legitimate B, but I will admit the wave count is not real clear in here. So what I'm watching is the fact that we're getting some divergence in here. Okay, we're getting divergence on RSI, and we're getting divergence on DI plus, and it's also showing up here on the demand index. So that's why I'm thinking this is looking weak, but it has refused to break down so far. Now I thought we were starting to do it in here. When was this? On the 15th. But it's bounced back, and it's actually continued to close above the 10. So right now, I'm just watching this thing to see if it is going to break down. If it continues to push higher, then we've got to reevaluate. But right now, Facebook has refused to break. And the last one we'll take a look at tonight is Twitter. Twitter, I thought we had, and this is all the trading on Twitter. Okay, so I thought we had a little head and shoulders bottom in here. That's why I do this neckline like this, and got this breakout, and it actually projects up here to around 63, and it might even try to close this gap if it continues to push. When I start to count waves, get rid of the crosshairs, you know, when I start to count waves, I get 5 minor waves up, you know, 1, 2, and then you've got 5 little waves in here. It looks like to me there's some kind of consolidation going on here. You know, and then you get a 4, and then the real question is, what is this doing? So this could be a 1, 2, 3, 4, and a 5th wave. So I'm putting a 5 up here. If we have 5 minor waves, we'll then be looking for, you know, a pullback of some kind, and then it'll go. But right now, no predictions on this. We're just trying to see. Again, this is another one. It's just like Facebook. It's not breaking down. Okay, so it's continuing. The trend is higher. If you got to say that the intermediate, the 21's above the 55, they're both trending higher. The 10's above the 21, the short term's trending higher. I just don't trust this enough to say I want to jump in and be a buyer because I am seeing a little bit of divergence in here. We got a little bit of divergence on this peak here on the RSI. So I don't know. I just think this one is, again, one I cannot get solid conviction on to say, hey, I want to be jumping in to buy calls, and or it's not rolled over enough to buy puts on yet. So we're just going to continue to monitor this, but right now it's trying to continue its trend to the upside. All right, that's it for tonight. The Apple, Facebook, Twitter, and the market snapshots. So we'll be back. I know I've got an update tomorrow, Tuesday. I'll take a look. I know I've got 3 of them, and 2 or 3 of them, and I'll just have to see which ones I'll put out an update on. And then I'll be back Wednesday night with the market update, and we'll take a look at some Chinese stocks then too. By the way, I guess the market got hit today because everybody's the word out is on the because the China, now they're concerned about China, but then also I guess the finance minister of China, when he was down at a meeting, I think it might have been the G20 meeting, made a comment about the fact that, hey, we're not going to change our economic policies and what we do because of one economic indicator coming out. And so even though there was a lot of PR and a lot of noise about the $81 billion being dumped into 5 major banks, apparently he's trying to signal at least that, hey, we're not doing anything more, and because we're not seeing a whole lot more yet. So that's when everybody's kind of like doing when I looked at, that was the other thing I was going to mention today, there were 5 down stocks, almost 5 down for every one on the New York Stock Exchange. When I looked at my 35 I closely monitor, only 1 was up, and that was Apple by 10 cents. I haven't seen the page look like that in a long time. And of the Chinese stocks, 31 out of 36 were down for the day. So pretty dramatic selling off for a 100 point down day on the Dow. So we'll have to watch to see what kind of follow through we get tomorrow or Wednesday. All right, have a great Tuesday, Wednesday, everyone. We'll be back with you then.